From the floor of the CME Group, this is Danny Riley with today's Cash Close. And the name of this video, S&P Futures up 90 handles in 10 days, and how do you like those apples? The high of the day in the S&P came in at 1979.5 midday or late in the day. The low came in at 1971 even early, and last were 1978.5. We're up 11 handles. Total volume, now get a load of this. We have 180,000 minis traded in Globex, and we have a total of 800,000 traded all day, and you can do the math there, and we have 1.4 thousand big S&Ps traded in the pit. MOC, we had a little bit of a MiM flip. It was showing like 150 million to sell when it started out, slowly went back down to like 62 million to sell, and the actuals came out 30 million to sell. Tomorrow we have the MBA Purchase Applications, we have the EIA Petroleum status report, and the big part, the FOMC Minutes. Now look, there was a lot of dark clouds around here back 10 days ago, you know, when we made that 1890 quarter low. And then the market bounced a little bit. And then we had this little bit of a funkadunk last Friday off those Russian headlines of the Ukraine hitting that Russian military transport. Now, at the end of the day, what I believe what happens is all this stuff does is it just builds up more buy stops above the market. After the algorithms go down and they chase those news headlines down, they elect those sell stops. Once that's out of the way, the markets start to short cover, and what do? They chase the upside buy stops. Now in the room today, I put out where the stops were. I said 1977.70 up to 1981.83. But to tell you the truth, once we get up above 81, 82, 83, I think we got a clear shot to 1990, 1993. I do believe that this week the S&P is on a path to new contract highs. Now, the big thing is that the geopolitical stuff has kind of eased a little bit, and now with the Fed minutes tomorrow and the Jackson Hole Symposium, where Janet Yellen is going to speak and Mario Draghi is going to speak, it's very unlikely that the markets are going to react negatively to this stuff. One, Europe is in no position to lower rates right now. And two, all this talk about raising rates recently is being washed out by a gigantic rally in the bonds. Has anybody looked at the bond futures lately? They got up to almost 141.26, John. They got up to almost 141 and change, 26. And to tell you the truth, I believe that was one of the keys to this rally. When the bonds started trading around 138 and they started back and filling, and then they started trading 139, 140, you can tell that there was a shift in sentiment. You know what? I'm going to leave it like that, you guys. Do me a favor. Hit me back up on the YouTube channel. Give me your thoughts. Let me know you're listening. I know it's vacation time, but I'm still working. I'll see you tomorrow on the opening print.